Hey guys, good morning. It's Andrew from Stockmoney Lizards, and today we're going to start by talking about the Fed and how his Jerome Powell has raised rates to 0.25%, possibly aggravating the current banking system. He was questioned in the press conference as to sort of whether they are pouring gasoline on a fire at the moment by increasing inflation rates, though he seemed pretty calm. He basically said that the banks are resilient, the banks are doing well, so honestly it felt like he was in control. Then again, I don't know if this is a bluff or not. Anyways, let's just dive into the chart. By the way, we'll have more on this story in our first newsletter, which we'll be publishing later this week. So if you're interested to read more, I recommend checking us out. We've got a new newsletter coming out. It's going to be really good. Cool. So let's just dive right into the chart. Last week we identified that this was a broadening wedge. We have one touch, two touch at the bottom, and we have 1, 2, 3 at the top. We expected a breakout from this high over here, and we expected an increase in price of roughly 10%. We got an increase in price of exactly 10%, and now what we foresee is that price should correct anywhere between 15 and 20% down if it is to move like Google moved back in 2008 and 2009. And I'll just pull that chart up in a moment. That would see us pull back anywhere between 21.7 or 23k. So those are my targets. I'll just put a line over here so that we can keep reference. 1, 2, and I think we have a chance to come down as low as 21, 22, so I'll leave that there. The Google chart that I'm relating to is this. So basically in 2008 Google had a high. It corrected by about 67%, very similar to what Bitcoin did. It then found a bottom at these levels, made a nice high, and pushed quite high up from here. This was a move from 6 euros to about 8 euros. It then made 2 lower lows like we saw in Bitcoin, and made 3 higher highs, consolidated at the top, made a breakout. That breakout was met with resistance after moving up 10%, 9.6%. And then what happened was it folded 23, 24%, closing these gaps over here, which were opened upon the increase in price. And then from here, we had a beautiful V-shaped recovery before taking us to new highs in Google. So sort of, I do expect something similar to happen with Bitcoin. We had the 1, we had the 2, we have 3 touches at the top with the breakout, 10%. Now with the current macro environment, is it very different to what happened in 2008 with the bailing out of the banks? Is what Jerome Powell is doing now actually bailing out banks? We'll see. I'm not saying this will happen. I'm just saying it's good to have a plan to see that if this happens, what will we do? And what we'll do is we will be aware that this is actually part of the plan. And what I mean is if it goes down to level 3, level 2, or level 1, we knew this could happen, so Bitcoin is moving as we want it to. Cool. So I'm just gonna go now to the weekly, and in the weekly what I'm gonna see here is, just let me remove this. So what we can notice is that on the weekly we had 7 consecutive weeks of upside on the TD sequential. We broke through the 20 period moving average. We then saw 2 candles. This candle was essentially screaming, I don't know if we should go higher, and what I mean by that is indecisiveness. And then the following candle is a bit of a misleading one because it's actually a bullish candle, but it's printing red. So basically it opened at this level, went all the way down to touch the moving average, and closed at this level. But it actually looks like a hammer candle, and hammer candles are normally quite bullish because they signal upside, and that's sort of what came after it. Now we've been saying that we expect price to come down to the moving average, and sort of at this level we were saying we believe it will come down to the moving average at some point. It did. However, this doesn't look too secure to me, and for the longer we remain in this level, moving average keeps on coming up. Moving average is now at 20k. That's really good, and sort of I expect it to keep on moving up to maybe 22k, so that then by the time we get that 20% discount on Bitcoin, the moving average would be at 22, somewhere in that region, and then sort of I would be personally happy that we got the bounce of the moving average. Cool. So that's the weekly. We're currently on a weekly 2 above a 1, very strong 2 above a 1. So technically all my expectations of price going down doesn't even need to happen. We can continue going up for a considerable amount of more time until we hit the 9 top. So we'll keep track of what's going on with the weeklies. And when it comes to the month, nothing's changed. You know, we had 13-14 months of downside on the Heikinashi candles, and now we're looking at 3 very strong months. And month 1 was extremely strong as we had no lower shadow on the candle, and month 2 is relatively strong in the sense that we've got a large body. You know, we opened at this level and we closed at this level. We saw highs go up to 28k, so that was good, and now we are above candle February, sorry. You know, so that's all positive. Today I just want to go into the Ethereum Bitcoin chart because we haven't looked at this in quite a while, and sort of it should be very good indicator to use if you have altcoins. So we analyzed this chart a while back and we said we've been trending in this area for about 500-600 days. It will break to the upside or to the downside at any point. My bet was to the downside. And sort of at the moment we are below the 20-week moving average. We hit it, 20-week moving average, we hit it, and now we're coming back down. We did not want to break below 0.67. We're currently at 0.63, so we have broken below it, and we're on a 2 below a 1, so that's signaling 7 more weeks of downside, which is the opposite of what Bitcoin is currently going through. The next position of safety is at 0.57, so if there is a bounce in Ethereum, then I would expect to see it at anywhere between these levels of 0.59, 0.58, 0.57. You know, I'll just lower this slightly. If we don't get a bounce from here, or if we do get a bounce from here that is relatively weak, okay, where it meets the moving average and comes back down, then I expect downside with support coming on this trend line. And the reason why I say this trend line is because I drew 2. One trend line uses these lows and the other trend line just uses this low and these shadows. So I expect that as Ethereum takes longer and longer to come down, that's good for Ethereum. It shows more strength, and sort of that consolidation back down to lower levels doesn't need to be as harsh as it would have been, for example, over here. Now, this directly correlates to Bitcoin dominance. Bitcoin dominance is on a 3rd week above a 2. It's been trending in this particular range of 46% to 40%, even as low as 39% of the market for many days since 2021. So sort of whilst I could see some resistance here, we are breaking above this trend line, but this trend line, if I raise it slightly, it means that we've met some resistance. Possibly what could happen is we see a situation like this where we get a correction down to the moving average, but instead of break through it, we will have it as support, which will eventually propel us forward into the Bitcoin dominance chart, possibly taking Bitcoin dominance higher. As we correct downwards, I expect Ethereum to actually correct to the upside because it seems to be inversely correlated. Cool, guys, so this has been a bit of an update for what's going on with price, and we'll keep track. Nothing too new other than that. Trade safe. A lot of volatility is coming, I believe, and sort of protect your assets, guys. Stay safe. Ciao, ciao.